So this is video number 2 of my video lending series. In this video, I talk with Jackson Hughes, who is a broker lender, and he tells us what the strengths of brokers are. As always, if you have any questions about the Boise housing market or the Treasure Valley in general, please reach out to me. Tell us a little bit about broker lending, and maybe just start off, what is a broker lender?
Yeah, no, good question. A broker differs from other lenders in the sense that rather than lending on our own lines of credit or lending our own products, we work with 20, 25 different wholesale lenders. So when someone comes to us and tells us they want to buy a house and they need financing, we actually go shop the market for them to find, hey, who's offering the product and the rate that fits our borrower the best. So that's kind of the difference between.
And so where do you shop? Is there like a broker like mall or something like that?
Good question.
Like who are these companies that are giving money to people like you, buyers?
Yeah, so they're not super popular, or you won't like see them on street corners per se. It like the biggest one in the country is United Wholesale Mortgage. They don't sell directly to borrowers, right? So you have to go through us to reach them. But we have software on our side. So when a borrower comes to us, we price out the loan, and then that gives us access to the rates of these 20 lenders so that we can see it all in one place.
And do all brokers have that access to those same 25 lenders, or do some brokers have access to different lenders?
Yeah, it differs. You have to get signed up with every lender that you're going to work with. And so I think that's one of the advantages of Fulcrum is because we're the biggest broker in Idaho, we're signed up with just about everyone that we can be signed up with. So, yeah.
And do the rates actually differ? I mean, significantly? Or are you talking about like a 16th of a point or something like that?
You would be surprised. They actually do differ a good amount. I'd say between the bottom and the top, it can be, 0.5%, which that's a pretty big jump in someone's monthly payment. So it definitely is worthwhile to go shop around. And what's interesting is these wholesale lenders are always moving their interest rates, right? They're always moving. And so 1 month, let's say United Wholesale Mortgage may be the best fit for borrowers, but if they up their fees, we have the ability then to go somewhere else, right? And find the product that fits our borrower.
Can you actually go somewhere else if you've locked in a loan?
You're not really supposed to. Okay. There are exceptions to that rule. Like if someone locks and say it's like a 45-day close. So like a longer. Yeah, it can be switched, but it's kind of frowned upon in our world. But there are exceptions to that rule.
Okay. Yeah. Tell us about Fulcrum and what does your company do best?
So I moved to Fulcrum about 1.5 years ago now, and the biggest reason I moved over was the rates and fees piece. Like it's just much cheaper where I'm at compared to where I was at before. We're able to offer our borrowers a much better deal. So that's kind of what got me in the door. But I love Fulcrum because we pride ourselves on being speedy, quick, but also having a high level of communication. It's my goal on every deal that I do to bring peace of mind to my borrowers, right? It's a big decision to make when you're buying a house. It involves a lot of your money. And so through the process before or as you're getting qualified for the loan, and then once you're under contract, my goal is to bring peace of mind, to be the expert. And I think Fulcrum has provided me the resources to be able to do that.
How is it that Fulcrum is able to give better rates than what you felt like you saw at the other company that you were at?
The biggest thing, other than being able to shop the market, is the fact that our back-end compensation is far less than most other lenders.
And you're talking about compensation for the company?
For the company, yeah, which involves me as well. I do make less on each loan than I made before, and our company makes less than most other companies. So that's the biggest difference. And we make the exact same, we have the same compensation no matter what loan, no matter what lender we work with. So a lot of times there'll be margins built into, say, FHA loans or VA loans where other lenders are able to make more on those government products. We don't do that. We charge the exact same on every loan we do.
And is your like loan initiation fee, that kind of thing, is it like, have you found that it's lower than where you were at before?
Yeah, we have no origination fee. So other than like the underwriting fee and the processing fee, which is pretty standard industry-wide. We don't charge an origination fee.
Do you guys do all kinds of loans, or are there certain types of loans that you don't do?
Yeah, we can do just about anything. I'd say our only limitation is we don't really do land, so just land loans. But we do all the standard conventional VA, FHA loans, as well as what we call non-QM products. That are kind of the outside the box loans. We can do those as well.
And when people call you up, what are some problems that like you see reoccurring, like some frequent mistakes maybe, or maybe just, some story that maybe you have to share, something that happened recently?
Yeah. I'd say probably the biggest problem I see borrowers run into is, especially for self-employed borrowers or people who earn commission for their income, 1099.
So contractors, basically, right?
Contractors, yeah. Usually we're going to need a 1 to 2 year history being in that job in order to qualify for that loan or to use that income. So a lot of times we have people come to us, they just started a sales job or they're now 1099. They own their own business and they've started making really good money, but they're only, say, 14 months onto the job. They've only done their taxes one time, right? You're usually going to need 2 years. And so the income on your pay stub isn't always the income that the underwriter will count towards income. So again, that's another reason to go talk to an expert, right? Build a plan to make sure that the income that you're making can be used to qualify for a house.
Now, here's a question I frequently get. What if somebody has just moved into a job that's a W-2 job?
Yeah.
So it's a new field that they're in. Let's say they suddenly are, I don't know, would be a good example. Maybe they're now just starting a new nursing career.
Yeah.
They're getting a W-2. They've worked in it for 3 months, but before that they were accountants.
Yeah.
Do you also need a 2-year history for that, or can you just take that as is?
That's somewhat underwriter discretion.
Okay.
However, if you are guaranteed 40 hours at a certain rate, so either you're salaried or you're just guaranteed full time, oftentimes we can use the offer letter before you even start on the job.
Right.
Now that's usually if you have some history of being a nurse.
If it's a new career though, you're...
Well, like let's say for the nurse example, if you have gone to school to be a nurse, that would be taken into account, right? Because you've studied what you need to study in order to get into that.
And this is not necessarily connected to Fulcrum, but is that the job of the underwriter, is to assess risk? That's his main job, his or her main job. Because the risk here is if somebody's just starting a nursing career and they hate it,
right?
They quit, and then now they're going to work at Carl's Jr.
Yeah,
which by the way pays $15 an hour.
Not too bad.
But is that what is that the job of the underwriter?
Yep, they're assessing risk, and then they are making sure that the borrower aligns with the guidelines that they're presented with, right? Fannie Mae, Freddie Mac. Like if you're getting a conventional loan, the underwriter's making sure that this borrower fits into the guidelines.
And so at Fulcrum, are the underwriters then in the companies that you are dealing with? Is that where they're located?
Correct, yeah. So when we work with United Wholesale Mortgage, we're working with United Wholesale Mortgage's underwriters. Okay. And I think before that was a disadvantage in the sense that
they're not in-house?
They're not in-house, but I don't see it as a limiting factor in the sense that if United Wholesale Mortgage, well, first of all, that's what they specialize in. That's all they do, right? They underwrite loans, and so they get really good at it. But if their turn times start to slow, we're able to shift and move to a different lender. Like if we notice a pattern, hey, they're not turning it in on time. We got 19
So it's in their best interest to do a good job.
If they're slow, they're not going to be used and they will go out of business. Whereas for lenders that have just in-house underwriting, when things get busy, if they slow down, there's nowhere to go, right? They're limited to that.
Yeah, that's a good point. Yeah. Any kind of advice you would give to either a first-time home buyer or even just somebody who's thinking about moving to Idaho? Maybe Idaho's a little different than in other states, something that you've seen like that. What kind of advice would you give?
I would say right now, I think oftentimes people are swayed by the big media companies as far as what's going on, both in our interest rate environment as well as the housing market. And I understand why these media companies are talking about it, but I would say in order not to be swayed left or right by them, talking to an expert is the most important thing you can do.
And you're talking about like what's going to happen in the housing market specifically?
What's going to happen in the housing market, and also like, does it make sense for me to buy?
Mm-hmm.
If interest rates were to jump to 12% tomorrow,
Mm-hmm.
there would still be people in our market making a wise financial decision to buy.
Mm-hmm.
Now, if rates drop to 2% tomorrow, there would be people in our market making an unwise financial decision to buy, right?
Mm-hmm.
The decision to buy a house is not just based on where interest rates are at, or because interest rates are relative, right?
Mm-hmm.
It's low compared to 30 years ago,
Yeah.
but really high compared to 2 years ago. It's relative. And so it's important to talk with an expert who, one, is able to look forward at the market and say, hey, we think this is coming, but also someone who can analyze your financial situation and make sure that you're able to afford a house that you could get into.
So what would you say some of the factors are that somebody should consider when thinking about buying a house? You said it's not just the interest rate, so what are some other things?
Your income, your budget. For you, like, where do you want to live?
Mm-hmm.
What does the school system look like?
Mm-hmm.
But we want to analyze their income, assets, credit, debt to make sure that they have the money for upfront for down payment and closing costs, but also, are you able to make this payment every month, right?
Right.
Yeah.
Thanks for watching. Now, how do brokers and correspondents compare to banker lenders? Once I get that interview published, you'll see that right here.